Hey, Smarty Pants! ESG investing promises greater returns while solving society's biggest problems like climate change and social justice issues, etc., etc. It sounds like quite the silver bullet, but is it? If you want to invest your retirement into environmentally friendly, socially responsible companies and you've been eyeing ESGs, watch this video first. I've done some digging on a Wall Street Journal, Vox, CNBC, and found that there's a lot of evidence to show that ESG investing isn't the silver bullet a lot of people, myself included, want it to be. It costs you a lot more, and there's emerging evidence that it even takes away from real change. I'm going to talk about what ESGs are, if ESGs work, and what you need to know before you put your money into a fund that's labeled ESG. First, let's define what I mean when I say ESG. Okay. That's the first problem. There is no one definition. You'll often see index funds, both stock and bond funds, labeled as ESG. It stands for environmental, social, governance, which is generally meant to convey that companies in these funds are good at one, two, or all three of these categories. But there is no definition. There's no set of rules companies need to follow to be labeled as such. What the consumer is told is that ESG funds move money away from bad companies and put them towards good companies, ethical companies. But without a definition, who's to say what an ethical company is and what a bad company is? Anyone. That's who. Anyone can label their index fund as an ESG. Now, Emily Stewart wrote in Vox, plenty of people would be surprised to learn the fossil fuel-free fund they've got their 401k in isn't so fossil fuel-free, or that the company providing them the fund, such as BlackRock, State Street, and Vanguard, may happily vote for bloated CEO pay packages and against disclosures on items such as diversity and climate. And so even though we don't have a definition of what ESG is, we have a lot of investors who really want to put their money into environmental, social, and governance funds because they want to invest their money ethically. And we're willing to pay more for this. Thus, oftentimes funds labeled as ESG cost more than your average fund. They're being greenwashed or woke-washed or acid-washed jeans, whatever kind of washing you want to call it, but oftentimes it's simply a marketing ploy. Even though a little bit higher in fees doesn't seem like a lot, it actually takes a huge chunk out of your retirement. Hi, my name is Kate Moody, creator of the Savings Free Budget, here to help you outsmart your money. I help independent women secure their financial future, stop worrying, and enjoy their life without shame or judgment. If that sounds good to you, be sure to subscribe. Costs are absolutely crucial to your comfort in retirement. An analysis by the Government Accountability Office found that even a 1% increase can take a giant chunk out of your retirement. In their report, which I'll link to below, they have two scenarios. In both scenarios, you are 45 years old. You invest $20,000 at 7% return. I know that's a lot of numbers. Don't you worry about it. The numbers that you need to be worried about here. In one of the scenarios, you pay 0.5% in fees. In the other scenario, you pay 1.5% in fees. And so at the end of 20 years, you go to take out your money. In the scenario where you paid 0.5%, you now have a little over 70 grand. Woo, yay. And you think, well, there's only a 1% difference, so 1% of 70 grand is like $700, so the 1.5% fee fund must be like still $69,000, right? Wrong. The 1.5% fee scenario ends up with just over $58,000. $58,000. That is a 17% decrease. Just because the fees look a little bit higher doesn't mean that they aren't going to make a massive change in how much you have when you go to retire. And because companies can make so much more money off of you, that's why they're pushing ESG products. They know that you and I are desperate to make positive change in this world and really, really, really want to put our money where our values are and to help make the world actually a better place. so we're willing to pay for it. There is an argument that ESG funds make more money in the long run, so, you can cover those extra costs. But according to James McIntosh in the Wall Street Journal, he argues that the only real money to be made is by the venture capital firm that originally funded the startup when the startup goes public. That's when the money is made. Absolutely nobody knows what the future holds, so they may end up being awesome. Who knows? I'm telling you what I read. There are some ESG funds which you can actually look through and see, like, yeah, they're doing a pretty good job. They actually really vetted the companies that are in there, and they are in line with my values. Cool, but you got to do the research. I'll talk about that at the end. Now, the extra bad about ESG funds, the impact of divestment campaigns, which is what it's called when there's a mass movement to get rid of stocks and bonds held by bad companies, is debatable. What isn't debatable is the fact that they remove good people from having a voice at the table of bad companies. When you own stock, you are technically the owner of a company, and thus you have a voice in what the company does. The more stocks you hold, the more of a voice you have. So if you don't like what they're doing, they have to listen. They might not act on it, but at least they heard your voice. The more shares you own, the more of a voice you have. For example, Elon Musk just bought a lot of Twitter. I think I heard 7% of Twitter, which is ginormous. So if he goes in there and he's like, guys, we're getting a freaking edit button, you bet there's going to finally be an edit button on Twitter. So when you sell your stock, when you divest of the bad company, they don't have to listen to you. Now, divestment campaigns do garner a lot of attention and a lot of bad PR, which is good to help companies to change their ways. But again, their real effect is debatable. Okay, so how can you invest ethically? I'm going to link to the Vox article, which has a very thorough rundown of how to invest ethically because it takes work, but it can be done. If you want me to do a video on that, let me know. Please type in the comments, please do a video on how to invest ethically. I will do that video for you, but only if you let me know. If you don't feel like doing the work, and I can't blame you, you can work with a financial advisor who is willing to do the work for you. Or you can invest as you normally would, get great returns, attend a climate change meeting once a month, maybe use the money and give it to charity or write to your representative. Unfortunately, money talks, and the more money you have, the more people will listen to you, which is why I want to get money into the hands of good people. This was a bit of a bummer video. I wish I had better news about ESGs. I want them to be that silver bullet as well, but kind of not really. If you want quick actions to help you save more, stress less, and get control of your money, check out my 24 easy money moves checklist in the description. Thanks for watching. Cheers.